Hi guys, today we are going to discuss about Dr. Lal Path Lab, which is the premium health service stock in the listed in the share market. So we'll start with the basic fundamental and then we'll move to the technical analysis. So going to the fundamental, so this is for the health services sector and industry is your medical industry. Then it's a mega cap. Its market cap is around 22,000 crore plus, with a revenue of 2,000 crore, and its PE is around 74. Since it's a premium stock, so it generally trades at a very high PE ratio, and it gives a dividend yield of 0.6%, which is not very significant. Okay. So we do the depth analysis of this stock. For the depth analysis, DEP stands for debt, earnings, and profit quality. These are the fundamental parameters. These are the 32 parameters on the basis of which we'll analyze this stock. This is the fundamental analysis, and based on these 32 parameters, our rating for this stock is 28, which is excellent. So the stock is good in 87.5% of the criteria whereby we are discussing. So a quick look at the DEP. D here stand for debt. So company has a debt to equity ratio of 0.16, which and it is easily manageable as confirmed by the interest coverage ratio and the current ratio. So all in all, the D part or the debt part of the Dr. Lal Path Lab is pretty good. And coming to the earnings, so in the last 5 years, Lal Path Lab has grown its sales by 15%, EBITDA by 15.6%, and EPS by 12%. So company is showing double digit growth, and even in the last 3 years its growth has been in double digit. EPS is around 9.7%, which is near to 10%. So basically we are having a double digit growth company, and which is a mega cap. And coming to the earnings consistency, so this is the yearly breakup of the debt, EBITDA, and earnings. So in 2019, company had a earning of 199 crore and moved to 226, 292, 345. So we are seeing a significant smooth earnings growth till 2022. But in 2023, company had a 30% fall in profits, and thereby stock has also kind of plummeted from a high of say nearby 4,000 to coming to almost say 1,700. But I think these kind of bad phase of growth can provide an opportunity for a good investor like you to invest in this such stocks. And as soon as there is a growth recovery, as we can see recovery in the last 2 quarters, it has again picked up growth for 43% and 52%. So we are expecting this company can again go to the previous levels. So, and again, its profit quality in terms of margins, return on invested capital, your dividend payout, your operating cash flows is exceptional. So all in all, this is a very fundamentally good company. Coming to the technicals now, so we are looking at the weekly chart and the daily chart, and these green lines here represent the resistances, and orange represent the support. So company, if we see since May 2023, it is making new highs and higher highs and higher lows. So we can say the company is an uptrend since May 2023. And from the daily perspective, obviously the volatility is high, but the company is in a like growing mode. And so I think overall technically it's going doing good. And if we compare the say the return ratios which the company has delivered in the last 1 year, so this is the return for the Nifty, this is the return for the Lal Path Lab, and there is the gap, the alpha which this stock is having over the Nifty. So it is clearly outperforming Nifty if we consider 3 months, 6 months, 1 year, or even 5 year period. So I think it's a good stock. If you are looking to invest with a stop loss of around 2157, which is nearly here the 200-day moving average for this stock. So with this stop loss, we can buy this stock with target of at least 2,900 in short term, and around 3000 plus in the long term. So I think it's a good stock to invest since we checked on both fundamentals and technicals, and it is doing okay. Okay. Just to reiterate, this is just my own analysis of the stock. I'm not a SEBI registered and a research analyst. So please do your own study, do your own research before investing. I'm just sharing my thoughts for this stock. Okay. Thank you.